Everyone is talking about an AI bubble, but almost nobody understands what's actually happening. Some investors believe AI is the next internet. Others think it's another market bubble. The truth is much more complicated than either side admits. History shows that revolutionary technologies often experience periods of excessive excitement. That doesn't automatically mean the technology itself is a failure. Sometimes the biggest winners emerge long after the initial hype disappears. That's exactly what makes today's AI market so fascinating. Billions of dollars are flowing into AI development across nearly every industry. Companies aren't just talking about AI, they're building massive infrastructure to support it. That infrastructure investment may become one of the biggest economic shifts of this decade. But rapid investment alone doesn't prove whether a bubble exists. That's where the real story begins. Because some AI companies are already generating substantial revenue. Others are still investing heavily before profits arrive. That's completely normal during the early stages of major technological change. The challenge is identifying which investments create lasting value. That's why understanding the AI ecosystem matters more than following headlines. Next, we'll uncover the part of the AI market that most investors completely overlook. When most people think about AI, they focus on chatbots and flashy applications. But those visible products are only the surface of the AI economy. Behind every AI application sits an enormous technology infrastructure. That includes advanced computer chips, cloud computing, networking equipment, and massive data centers. Without that foundation, modern AI simply cannot operate. That's why infrastructure spending has accelerated so rapidly. Many businesses are racing to expand computing capacity before future demand arrives. Many businesses are racing to expand computing capacity before future demand arrives. Some of the biggest winners may be the companies quietly supplying the entire AI ecosystem. Those businesses often receive far less attention than the AI applications themselves. History has shown that supporting industries can become some of the biggest long-term beneficiaries. That's one reason experienced investors often study the entire value chain. Understanding where value is created matters more than following market excitement. That's especially true during periods of rapid technological innovation. The market often moves faster than business fundamentals. Eventually, those two trends usually reconnect. That's why patience can become an investor's greatest advantage, especially during periods of extraordinary innovation like artificial intelligence. Because the biggest opportunities often become visible only after the excitement fades. Next, we'll examine whether today's AI valuations are supported by reality or driven by speculation. A high stock price alone doesn't necessarily mean a company is overvalued. Investors often compare market value with revenue, earnings, and future growth expectations. AI companies are being evaluated on both current performance and long-term potential. That makes valuing these businesses more challenging than mature industries. Small changes in future growth assumptions can dramatically affect today's valuation. That's why markets can become especially volatile around emerging technologies. That's one reason experienced investors often focus on fundamentals. Strong businesses usually improve their financial performance over time. And eventually, the market often recognizes that progress. Artificial intelligence is also transforming industries far beyond technology. Healthcare is using AI to assist research and improve operational efficiency. Manufacturing is using intelligent automation to improve productivity. Financial services are applying AI to analyze data and streamline operations. Education is beginning to adopt personalized learning technologies powered by AI. These applications illustrate how AI reaches far beyond a single industry. The companies enabling this transformation may benefit as adoption continues to expand. But every investment still requires careful research and realistic expectations. Every major investment opportunity comes with meaningful risks, and AI is no exception. Competition is increasing rapidly as more businesses invest in artificial intelligence.
New technologies can also make today's innovations obsolete faster than expected.
That's why continuous innovation matters more than a single breakthrough. Regulation could also shape how quickly AI expands across industries. Rules may evolve as governments respond to new technologies. Infrastructure costs remain another important factor for many AI businesses. Next, let's explore the biggest risks investors should understand before investing in the AI revolution. Building advanced computing infrastructure requires enormous long-term investment. Businesses must eventually convert those investments into sustainable profits.
That transition may take longer than many investors expect.
Patience has often rewarded investors during previous technology revolutions. Long-term thinking often outperforms emotional decision-making. Diversification can also help manage uncertainty in rapidly evolving industries. No single company can perfectly represent the future of artificial intelligence. Innovation usually spreads across an entire ecosystem. Understanding those connections provides a much broader perspective. That's how many experienced investors analyze emerging industries. They focus on data, business fundamentals, and that approach helps separate opportunity from speculation.
Finally, let's bring everything together and answer the biggest question. Is the AI boom really a bubble?
The answer depends on what you mean by the word bubble. Some individual companies may become overpriced during periods of intense excitement.
That has happened throughout the history of major technological revolutions.
But technological progress often continues even after market excitement fades. Innovation doesn't stop simply because investor sentiment changes. The businesses creating real value often continue growing through market cycles. Revenue, profitability, and customer adoption tell a much deeper story.
Those are the numbers many long-term investors pay close attention to. Because sustainable growth usually creates lasting value.
Artificial intelligence may still be in the early chapters of a much larger story. Nobody can predict exactly how the next decade will unfold, but history suggests that transformative technologies often reshape entire economies. Artificial intelligence appears capable of influencing many different sectors. That broad adoption could create opportunities across the entire technology ecosystem. At the same time, investors should always remain realistic about uncertainty. Diversification and patience have remained valuable principles across many market cycles. Those principles may become especially useful during periods of rapid innovation. The future of AI will likely be shaped by both technological progress and responsible execution.
In the final section, we'll bring everything together and explore what today's AI boom could really mean for long-term investors.
So, to whom it pants, is artificial intelligence really a bubble? The honest answer is that nobody knows with certainty. Markets are constantly pricing both opportunity and uncertainty. Some expectations will prove correct, others almost certainly won't. That's exactly how investing has always worked. The biggest fortunes have often been built by focusing on long-term business growth, not by predicting every short-term market movement. Artificial intelligence may become one of the defining technologies of this generation. But the companies creating lasting value will likely be the ones solving real-world problems. Businesses that improve productivity often create sustainable competitive advantages. Those are often the kinds of businesses long-term investors watch closely.
Those are often the kinds of businesses long-term investors watch closely, because sustainable
innovation tends to outlast temporary excitement.
That's the difference between chasing headlines and understanding industries.
Knowledge creates confidence during uncertain markets, and confidence helps investors stay focused on long-term goals. Whether AI becomes larger than anyone expects or develops more slowly, disciplined investing remains important. That's a lesson investors have learned across generations of innovation. The future belongs to those who continue learning while the world keeps changing. Understanding the AI revolution may ultimately matter more than trying to predict every market move.
Thanks for watching. If you enjoyed this breakdown, subscribe for more investing insights, technology analysis, and long-term market education.